Hi guys, welcome back. So during the long weekend, a lot of people ask many questions regarding to some stocks, and I see quite some concerns, so I want to do an update on some of our stocks based on what you concern the most, and I'll follow the order by the vote and chose what to talk about based on that. And obviously LKCO has gotten the most attention, so let's spend more time on that. So recently LKCO had been going through a little bit pullback or correction, which is not a surprise at all after such a run-up recently. So I see a lot of people thinking, why has LKCO been dropping every day so hard? And if you wonder why LKCO had been dropping so much, then we should really ask ourselves why it was just only 1 month ago when we thought 1.7 was already so high, and we were quite happy that it has grown to 1.7 or 1.8, looking so strong and good momentum. So if 1 month ago we thought 1.7 was high, then why after 1 month we would feel that 2.2 is low, while it's 20 to 30% higher than the previous high we consider. So that's why if we have the feeling that 2.2 is low and LKCO had been dropping so hard, then it is what the institutions have been doing. Then it means whatever the institutions are doing, it's quite working, because it is how they make money, how they succeed in the stock market, to make us retail investors think a certain price to be high or low, to use the price movement to convince us that 1.7 was high and 2.2 is low, especially when it comes to small caps, when they have the majority of control. So when we invest in small caps company like LKCO, we have to be extra careful and aware of this. And it's much better to focus more on the company's fundamental and our vision, especially our long-term vision of the company's future. And recently in the LKCO community, I see a lot of concern regarding to the report of the year of 2020 and worry about the market response to this earning, because if we see their financial situation, it is of course not up to the standard. And if we use their revenue and look at the company's valuation, it would be really expensive, because it would have a very big price to sales multiple. If we just look at the revenue to be 6.6 million and cost of revenue is 7.2 million, company is not making any positive income yet, and that's for Imago. So the whole company is burning more cash. So that's why they always needed to raise funds to fuel the company. And if we see the financial statements, the cash level is low, especially compared to their total liability, just a fraction of it. And these are all updated as of December 31st, 2020. And for the company to have poor financial report or balance sheet is something we have known since day one we invested in LKCO, since early February. I had expected that to be like this. That's why last time when we were out of the DOD's case, I said the next to watch out for is the earning. But this is only covering the year of 2020. I think they have spent a lot of money into different acquisitions of technology and also into R&D, and all of these actions could not be generating any revenue near as it should be for the next few years to come. We know the company has nowhere near the prime time of growth yet, so right now it's too early to judge, but more to look forward to the future. So I did not have any high expectation for the past financial situation, and I think a lot of the bad financials have been digested in the share price during the past 1 to 2 years, and probably the recent correction is also responding to this earlier. So as of right now, I don't worry too much about the effects it would drive for the share price in the short term. I think the recent pullback was because of the correction of a big run up, and also the correction in the A share, especially the China next sector, where it includes mostly the new startup and smaller caps index, because this looks more like it needs to get into a longer or bigger correction after a big bull run recently. Ever since the bottom in March, it had been rising for a few months, all the way until the 100-year anniversary event. So it's not unreasonable for it to pull back quite a bit or have a longer correction from here. So I think that would drive the movement of LKCO more than the recent 6K file. The past financial would be for sure bad. That was always what I expected anyways. I'm not even looking forward that much to the Q1 earning of 2021 either, because I still believe what's better is yet to come in the future. Here's the Global and China HD Map Industry report that our Discord member share. And here The general manager of Mobileye Greater China says by 2025, the global MAAS market will be worth more than US dollar 160 billion. If I give an optimistic estimate for China to have 20 to 30% of this part of market share, so it would be 48 billion for 30% of the market share, and then estimate Imago to have around anywhere between 15 to 25% of the market share in China, and that would be equivalent to 7.2 to 12 billion revenue for Imago. So not counting the other part of the sales for Super Engine and other companies they acquire, give it a lump sum to double it with the others, we can give a very rough revenue expectation for LKCO to be about 15 to 24 billion by the year of 2025. And for a SaaS company, it's normal to have a PS multiple of anywhere between 15 to 20, but to be more conservative, we can use the multiple of 10. That would give the valuation of the company around 150 to 240 billion. But this is extreme bullish case scenario, so this would make my very bullish thesis on LKCO not so out of imagination. But at the same time, we need to be aware that this is extreme bullish thesis on the company, because along the way to 2025, a lot of things can happen, a lot of things can change. China might not have 30% of the market share, maybe it could be less than 20%. But here I'm pricing in for China to be the number one player in smart city, autonomous drive, and expansion to other countries with the One Belt One Road project, and for LKCO or Imago to remain a good market size of 15 to 25% within the Chinese companies. But we need to know that more and more competition would appear. Like for example, in this article, it also mentioned the other players like Kwangdong and Waze, and we can expect that more players means less market shares. And also from now to 2025, I expect LKCO to do many more share offering to increase the cash position, or perhaps do more acquisitions of technology companies and invest more into R&D and share incentive. I saw some comments asking me why during the recap and takeaway what kind of new technology can benefit from the massive trend. I did not mention anything about LKCO. It's because LKCO would be the backbones of all of these technology I mentioned, and much more than that actually. The application would be massive. Not just these technologies I mentioned, like autonomous drive, EV, drones, but also smart city and smart agriculture. These are huge sectors to begin with, and I think it's going to be more and more applications that need this technology from companies like LKCO. Now, in terms of the share price movement, again, I think it's necessary to have a pullback for deeper or longer after such a bull run up. Nothing can keep going up like this. And on Friday, we have had a nice backtest on the 20 MA. It seems like it's acting as a support. If it drops 20 MA, it means it's temporarily gotten weaker or bearish, but this is only for the short term, like could be weak. That's why on this day I had said that it's not a bad idea to take some profit and might not be a good idea to buy. And also it was the biggest volume for quite a few months and a lot of selling volume here, making this day a big bull trap. So from the look of it that day, it did not look like it can keep running, but more like going into a longer consolidation or pullback. There is still support at 2.08 and 2, even if it happens to break the support of 20 MA. And for the extreme cases, it can backtest to 1.8 and still did not break through the uptrend overall. Okay, and for NIO, it is a similar situation because it had gone up from the lowest in May to the highest on Thursday, so 80% run up in a matter of 1 month or so. So we can really expect a pullback to happen anyways. Anywhere between 20 to 30% is still okay, not surprising. Especially the Chinese index is going through correction right now. So I think it's normal, especially there was sell the news action using the good delivery number on Thursday, the June delivery. So I think it can take some time to digest the bull trap here to consolidate or backtest further. For me, I think between 40 to 45 would be normal to pull back to. But in the long run, nothing had changed. Still, a lot of institutions are bullish on NIO and quite heavy in it too. A lot of pension funds, ETF had bought into NIO and likely for a long term. So I'm not too worried about the pullback. Fundamental wise, NIO is still sitting at a quite comfortable position, dominating the premium EV Chinese market, being the only one so far in the EV sector to be Chinese that is high-end prices. the ET7 effect would be coming in pretty soon, in just a couple months. I'm very much looking forward to that. And also near the end of the year, the company would release another sedan, and I'm also quite excited for that too. Thinking of how great it went last time they released the first sedan. I think it's gonna be once again enhancing their brand power in the Chinese market. Another exciting event to look forward to. For EH, I am still super bullish on EHang, even though they're not generating a lot of revenue or growth yet, and we should be expecting this at least before they get the certificate. But I think the certificate, it's gonna be approved first in China than the rest of the world, and EHang would be the first one to get it, making EHang the first company in the whole world to get this certificate. And I think it's going to be faster than we expect, just within a few months. And once they get the certificate finally, I think the share price is not going to wait for us, even though it has not started to make the real revenue yet, because it is the biggest news in the eVTOL world internationally. And EHang would get a lot of the attention by then, much more than the attention it got right now, because it can really be put in commercial use instead of being a concept or making test flights. Would be explosive news, I believe. And not surprised if it can send the share price directly to 70 or 100 plus. So I feel very good and comfortable getting into the stock early. Like I said, too early is better than too late. Much better, actually. So right now I'm just patiently waiting. Once they've got the certificate, next is for them to prove the business model and the management's executive level, as in how well they can execute their vision and prove to be the leader in this field. And I'm still holding strong conviction on EHang. In terms of share price, I think it had a very strong consolidation, even though it was trying to digest a big bull trap on this day, using also again the earning to sell the news. But so far it's mainly going sideways, having a strong consolidation, and I think it looks like it can break out anytime. Right now it's just going through more pullback from the correction of a lot of Chinese stocks and growth stocks in general. So I see this as a good buying opportunity. Next is ZEPP. I haven't done an update on ZEPP for a while, so now is a good chance. First of all, my bullish thesis on ZEPP have not changed since the last time I talked about it, when I gave a bullish thesis on ZEPP, because it can connect to the big ecosystem of the environment, the future city we live in, how the smart wearable device connect to other objects, vehicles, Internet of Things, etc., how it connects and work within the whole ecosystem. And also the smart health, which is their vision right now, to connect health and technology. And ZEPP has a lot of core strength. Their moat is that they have the most devices worn in the world internationally, and also making Xiaomi the biggest competition of Apple to try to take away the market share, especially in China, for the smart health and smart home ecosystem. And now that Xiaomi is making their own EV, it's going to expand the Xiaomi influence, and I believe they can, because the founder of Xiaomi, Lei Jun, is a very great entrepreneur. He had many experience in the past to turn out to be successful, so I believe he can do it. And ZEPP to be within the Xiaomi ecosystem, heavily invested by Xiaomi, but a much smaller market cap and lots of room to grow. So I think it's only a matter of time, and all we need is just patience. So I'm just being patient with it. In terms of price movement, last Tuesday it had a very nice testing of the resistance of 120 and 250 MA. Tested it and back tested. It doesn't look like an exit for me, but more like a pullback to back test the major support, because it is quite heavy resistance above this 12 range. But for now, I think it has formed a solid bottom, very healthy run up so far, so I'm not too worried about it. Just be patient, and I think my target price would be there without us realizing it. Next is WIMI on the list by vote, ticker symbol WIMI. This one might be one of the weaker one from most of our stocks, only about 20% up since the bottom, so I think many of us might be quite concerning right now. It was growing quite well, healthy run up, until the news of the shelf offering of up to 500 million on June 25th. So the market had been digesting the bad news for a while now, with many days of dropping, because 500 million is not a small number at all, while the company's market cap is only around 400 to 500 million. So that's a dilution of 100%. But at the same time, this is a shelf offering instead of a secondary offering. A shelf offering means it registering this 500 million. Instead of selling it right away, it could be within the next 3 years, whenever they feel they need to, or the share price is up to their expectation, or kind of a way to prepare investors for this dilution. Other than that, it did not have a lot of news recently, no recent catalyst to drive up the price. So that's why it's been going on the sideways mostly for the last 1.5 months. But we can be at the same time a little bit more optimistic about this, because when you think about it, during the whole time, a lot of the other small caps had been growing quite well, like NEO, LKCO had been all flying, having around 80 to 100% plus growth from the bottom already, and this is still lying down on the floor. So who do you think would be selling it, and who had been buying the dip or accumulating their shares? And I believe it would be retail investors running out of patience, selling out their position in WIMI, and at the same time, for the fact that it had been going only sideways and not falling too much, still above the support would be because there are institutions buying the dip. That's why the share price is still holding. So I think it's not the end of the world. For now, the support is at 502, and we see that on Friday it touched exactly at 502 and got supported. So this looks like institutions buying the dip for me, because it's dropping also with very little volume on Friday. So that's why I'm still being patient with WIMI. Similar with LKCO or a lot of the other stocks I'm investing, prime time is not here yet. Next is CAN, ticker symbol CAN. Right now the chart is not looking good at all for CAN, actually turning bearish. It had a nice rebound but still broke the 5 MA, and on Friday officially broke the 250 MA, turning bearish. Technically, $7 should be a strong support for CAN. Last time it got supported at 7 and had a very nice rebound and proved the support to be strong. This time it's seriously challenging the support again. So let's see if it can hold, and if it's not, next one is the gap below between 6 to 6.6. I don't know if it would get there, but I think that would be a strong support as well. I think CAN should be the leader of the many blockchain stocks listed in the US. It is usually the number 1, number 2 mining machines in terms of their sales and technology. I think they actually invented the miner that most people are using right now. So recently the share price had been dipping quite a bit for quite some time because of the Chinese government's crackdown on crypto. But CAN's sales are 80% from out of the country, out of China anyways. So the real reason is because Bitcoin mining is the proof of work, POW. So the miners usually need the newest equipment, newest technology to be the most efficient, as the crypto minings are all competing with each other. So right now, if China completely bans all the crypto mining, it means more than 50% of the competition is removed, making it more efficient for the others to mine Bitcoin. So they may not need the newest equipment. But before, the miners probably update their equipment once or twice a year, and every time it's a strong revenue boost for CAN. But I think this is just temporary hit for CAN, because a lot of the miners that are banned from China are actually moving out of the country and would more than likely put into operation by the end of this year. So it's just a couple months away before they're on full power again. On top of that, more and more miners in the world would appear as well, increasing the competition. So sooner or later, they will be back into updating their equipment again. And the cost of these equipment is still nothing compared to the revenue they can get by selling the Bitcoin they mine, as the price of Bitcoin would still go up in the long term, even though it's under the attack in the short term. And also, CAN had started to mine Bitcoin as well. It was a hedge against bear market for Bitcoin to ensure the company has sufficient revenue or cash flow to support the future operation, which is a smart thinking, I think. So I think CAN would have stable revenue, even though it's not looking great in a short term. And lastly, I think because a lot of the banks and organizations are applying for ETF, including ARK Invest actually, waiting to be approved by the SEC, which I believe would happen within this year. So once more and more ETF for Bitcoin get approved, it means more and more ETF or money would be investing into companies like CAN, as it is is quite one of the key players in the blockchain in crypto mining. So I'm not too worried about this in the longer term, even though I have quite a considerable position in CAN. At last, it would be the best ink. As the video is getting quite long, so I'm gonna use best to finish. There's no news or recent update from the company. It had gone up quite fast and also come down quite fast. This is the nature of a small cap stock, especially this kind of volatile stock. As I said in my video that share best, it is a little bit speculative for sure, because us investing in this company is trying to pick up a bargain and speculating there should be a turnaround for the best in a good scenario, and I still think it's not impossible. Now on this day, when it ran up to 2.80, I had reminded to take profit because it had gone up 30% since we bought in for just a few days. Way too fast, but I had a very small position, so I didn't bother. If I had a big position, I would for sure take profit or some profit. And on Friday, it was backtesting this previous important resistance to be 155. So after breaking it through, it would become a support. And on Friday, it exactly touched 155 and rebound. So it's still not looking bad yet, but just a good backtest. For me, right now, I'm just holding it, not doing anything. Unless it dips to 1.4 to 1.6 again, I might consider adding more, but I won't consider this as a big position anyways. And for short-term trade, stop loss is 1.37. Now that's it for today. I'm sorry if I didn't cover everything because it's getting quite way too long. If I have missed it on the list, you can write me a comment. I will include it in my next list and the next vote. Now if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.